JJ the CPA here. Hope you're doing well. Where have I been? Well, let me tell you a few things that are going on, and then for those that are interested in that or even noticed that I've been out for a little bit, I'll give you a little update on the personal side at the end of this video. But the thing I want you to note is for those that are really involved in tracking the employee retention tax credit, two big things have come out here just in the last week or so. We've got Revenue Procedure 2021-33, and we've got IRS Notice 21-49. You're already falling asleep, right? Tell me what's going on here, JJ. Huge, because in these, we're getting clarification related to gross receipts that are used to determine if you qualify for ERTC when looking at gross receipts being down. Most notably, they clarified, I knew it was the case, but PPP, as well as any of the grants, the restaurant revitalization, EIDL, etc., is not included in gross receipts in determining your gross receipts for ERTC purposes. Now, in IRS Notice 2021-49, very exciting section, at least to me, talking about related parties, talking about family members, most notably owners and spouses, and do they qualify for the ERTC? I'm going to tell you in a nutshell, most of the time, they won't. Family attribution rules do apply. I am doing an ERTC seminar. I'll put a link in the body of it. It's a new one. It's the third one. It'll be all fresh. I'll do a deep dive into that as well as some videos that I'll sprinkle out there related to that. But check that out. There's also a number of other clarifications. Nothing new in there, but this also does put it in black and white in the IRS's terms that yes, the ERTC is through the end of the year. Now, you ready for this? This isn't exciting. You would probably want to contact your congressperson or your senator about this because right now there is a bill that has passed the Senate. 67 senators have passed this, so this is on both sides of the aisle. But in the bill that's passed the Senate, that's now going to the House, and it's going to be then revisited in later in September when they all come back to DC, is ERTC ending September 30. It's not. When it's in a bill, that doesn't mean anything. When it's law, that means something. So they're coming up with ways to have to pay for all the stimulus, if you will, pay for the infrastructure bill that's being proposed. And one of the ways that that would be done is ending the employee retention tax credit early. It's indicated that it would save over $8 billion, or another way to look at it, they're expecting there to be $8 billion in tax credits in fourth quarter. Now, what piece of your $8 billion are you getting? Because if you're a small business and you have employees and you're not comparing your gross revenues quarter by quarter in 2021 versus 19, you heard that right, 2021 versus 2019, okay? What was going on in 19? Do you even remember, right? It was before the pandemic, and a 20% drop in gross receipts in 2021 may not be a big leap or a big hurdle to get over. And if you qualify for that quarter and you're 500 or less employees, all wages count up to $10,000 of wages per employee. The tax credit's 70%. You also get to include the health insurance that you're paying on behalf of your employees, still a max $10,000 per employee. But at 70%, that's a max credit per employee of $7,000 for the quarter. Let me make sure you're hearing this right, okay? I'm talking about $7,000 max credit per employee for quarter one. Max credit of $7,000 per employee quarter two. Follow it out. Per employee, as the law stands right now, up to $28,000 tax credit per employee. Do you have 10 employees? Do they all make more than $10,000 a quarter? Are your gross receipts down all 4 quarters? If the answer is yes to that, you're looking at a $280,000 employee retention tax credit. Even the news is reporting that many are not taking advantage of the employee retention tax credit. There's still time. You got 2 years to do it. If it ends early, it doesn't mean that if you didn't apply before then, you lose it. It's just that it may not be in play for fourth quarter. We'll see. Now, when we're talking about what's hot, 2 extra things that I'll mention to you. If you or a friend or a family member or your client has been getting the child monthly tax credit in advance and they don't want to, thanks to Chris Green, the CPA, for asking this question in a recent seminar, which was yesterday afternoon, and we were able to together get the answer, also thanks to Amanda. But you have until August 30th only, 9 p.m. Eastern Time, to go to the IRS website, go to irs.gov. You're going to see it on the page. You're going to see advanced child tax credits. You're going to click on that. You're going to see a portal. You can log in and you can opt out. You can't opt out after August 30th. Why would you want to opt out? Well, there's some that maybe are getting that money, but they know they won't qualify for the credit this year and they'll have to pay it back. Or they would rather just get the credit on the tax return. The thing to remember is that with these child tax credits, these checks that are being sent out, it's just advance monies on a credit that will be on the tax return. There will be a reconciliation of it, meaning if you qualify and you get the child tax credit on your 2021 return, whatever you got in advance, you will reduce down that credit in terms of what will then be offsetting the tax on your 2021 tax return. So there's lots of reasons that you may want to opt out of that, especially if you don't get to claim that dependent each year. The tax credit for 2021 for those that are 5 and under is $3,600, used to be $2,000. And then from over age 5, so 6, up to age 18, which used to be 17, it's $3,000. So the tax credit went up, and then now they are sending it in advance. They started this in July, so the most that will get paid out in advance would be half of the credit, right? 6 months or half of the year, so half of the credit. The second thing I want to make sure that you've got on your radar here, okay, is PPP forgiveness for the PPP that you got in 2021. Do not file for forgiveness on the PPP you got in 2021. Yes, file for forgiveness if you got PPP in 2020. That's what I would officially call PPP round 1. Get that in. But if you got PPP this year, do not file for forgiveness. Why? Well, we're going into the end of the year. They're looking at tax laws change. We potentially are looking at closings. There could be additional stimulus. I don't think so. I don't think there's going to be another round of PPP. May not be something new that comes out to replace ERTC. But you know, especially if you've been watching my channel, that once you file for forgiveness, you find yourself locked out if there's some new provision that comes out, because those that filed for forgiveness weren't able to reapply or go under the new formulas back when we were talking about PPP2. So even if like, what do you mean? What? Here's what your takeaway is. Why are you filing for forgiveness if you got PPP in 2021? Why? I know why. Because you're just like, well, I just want to check it off, you know? And that's okay, because I'm like this sometimes too. You know, just I want to get it done. I don't want to have to worry about it. I want to get it forgiven, right? I get it. All right? Okay? Take a deep breath. Because just checking something off to go, I want to get it done. I don't want to have to worry about it anymore. You may find yourself not being able to get additional stimulus if it even comes out, okay? So don't be filing for forgiveness if you got PPP in 2021. The other thing I want you to know is those payments are deferred. You don't have to file. You take your covered period plus 10 months. That's your ollie oxen free time. I don't care if you're self-employed, Schedule C, you name it. You got 24 weeks from when you got PPP distributed plus 10 months before any payments are due. That's into next year. So just checking a box. What are you doing it for? Now you tell, I'm getting a little excited. And the reason I'm getting excited about it is that I don't want you to be on the outside looking in later. Because right now we're looking at uncertain times. All right, hey, if you've made it to here and you've been a part of the channel, you may have noticed I haven't done a video in about 3 weeks. And this is the first day that I've been pretty much not in bed, or I should say yesterday was probably the first day that I wasn't pretty much in bed. I've actually not even been manning my cell phone. Alona in my office has been tending to my cell phone and emails. Luckily, we don't have any deadlines right now. So I've just been very ill. So I'm doing better now. What's interesting is that I tested 4 times for COVID, came up negative each time. Amanda came up positive for COVID. My daughter, who was vaccinated, came up positive for COVID. My son, who was vaccinated, came up not with COVID. My daughter's boyfriend, I shouldn't disclose outside of my family. Long story short, it's been weird. Vaccinated, positive. Me, negative. Now, if you're like, JJ, how come you haven't gotten vaccinated? Well, listen, here's the deal. Okay, I got my reasons. They have nothing to do with politics. I'm wanting full FDA approval. If you got to know. Okay, so if you're looking at me, I've been home in essence, other than 2 short periods of time at home, quarantining. Okay, I've been taking it easy. I've not felt well. I've had basically all the symptoms of COVID and the recovery of COVID. The doctor thought maybe I've already had or had the COVID, but then had it long enough that I wasn't testing positive anymore. So at the end of the day, there's just a bunch of stuff going on right now in our world. So I hope you're doing well. Know this, with the CDC, you should be checking out their website on it, because the CDC is indicating a number of things that we've had to learn with all the stuff that's been going on the last 3 weeks with us personally. And so I don't want to get into the CDC, but it's interesting. The CDC has indicated that if you get tested and you're tested positive, to not retest for 90 days, because the CDC is saying that you can potentially continue to test positive up to 90 days for COVID. But what they indicate is that if you test positive and you quarantine for 10 days and have no symptoms, you're no longer contagious. But I think we're looking at potentially cases that are ramping up. We know businesses are in various areas are having to require customers, venues are requiring customers to either show proof of vaccination or a negative test. And so if tests are having to be taken, and someone could still test positive even for 90 days, even past their contagious period, because what the CDC is indicating is, just because you test positive, this sounds weird, right? Just because you test positive doesn't mean that you're contagious. You have COVID, you test positive, but you may not be contagious. But what the CDC is saying, though, is that if you test positive, you're quarantined for 10 days. It's just interesting, though, because as more states or municipalities or businesses saying, hey, if you don't have the vaccine, then we need you to have a negative test. And so people are now going to get tested only for the purposes of showing that they have a negative test. But if they now are in a 90-day period potentially of when they had COVID, where they could have had COVID 30 days ago, now they are still testing positive, even though 30 days ago they had symptoms, they didn't have symptoms. Technically 30 days ago plus 10 days with no symptoms, they're not contagious anymore, according to the CDC. The reason I'm going in all on that is to let you know that this year is going to start going fast and furious. I need you to be ready to buckle up. I don't know that there's new stimulus that's coming out. You might have you and your family affected, okay? So if you're going to be down and out, if your business is going to have closure, if it's going to be affected by some of these things, it's affecting the commerce, well, might be a way that you're able to qualify for the employee retention tax credit. All right, so listen, I've got some additional videos that'll be coming out. I just recorded a long tax update that has some slides in it and whatnot, talking through some updates. So I'm getting back in the swing of it. Right now, I'm ready to go to bed because, well, let's see, what time is it right now? It's almost midnight, and I've probably overdone it with my first day back in the office. I came in yesterday for 30 minutes. And then also I needed to do my Group 51 seminar. And then today I had to come in and I did a seminar for Georgia, Society of CPAs that I wrote. And I just want to come on and say hello to everybody. Quick updates in terms of what's hot. And then this tax update you'll see come out. And I go through some of the things that I just touched on. But a number of things that are going on in the tax world. So a lot of stuff going on right now, but I don't know that we're going to have stimulus coming down the pipe to Band-Aid us. So it's time for you to decide, can you keep doing business the way that you're doing it if we go to closures or partial closures, or even if it's not a closure, but you can't have the same kind of interaction with your customers, that's affecting commerce, good, bad, or indifferent, politics, all aside, none of that really matters other than the reality of things seem to be escalating in terms of our country and its health. So really from my horizon, other than 2 times of travel, we'll just be home. And similar to when the pandemic was happening, I'll just be at home or at the office trying to stay out of harm's way, if you will. So you stay well. I don't care if you believe in a mask or not. I just want you to stay well. I don't care if you believe in vaccine or not. I want you to stay well. Do what's best for you. I'm doing what's best for me and my family. And at the end of the day, I love you. All right, hey, thanks for tuning in. I'd love it if you'd subscribe. I've missed you all. And then don't you ever forget, you've never met a CPA quite like me. All right, have a great one. Kind of a rough video, I think. It was kind of rough. You know, kind of rambled at the end, right? Whew, kind of hot. Well, I guess I could have turned on the air conditioning. Hey, it's great to be back. Love you.